recording, and good morning. Happy Father's Day. Happy Sunday. Welcome to Market Watch Group's Sunday Market Insights. My name is Scott, and I will be your host. As always, keep in mind this is for education, illustrative purposes only. Nothing we do is considered a recommendation to buy or sell any financial security or product. We're not brokers. We're not advisors. What we're going to do today, let's posture. That's the core function of our. Now, this week, we're wrapping up Section 5 in our trading plan. Section 5 is routines. What that means is, if you haven't, hopefully you've scripted out your dailies. If you need to finish with your weeklies. Today, we're doing weeklies. Look at the things that we're doing. Literally everything on here is literally a component on a weekly plan. Step 1, market posture. We review the market. We understand trends and cycles, and what types of trades make sense, the timing, the type of risk, etc., etc. It makes it easier to go into the week. Every week I look at the economic calendar. What's coming up? Where's the big days? Where do I need to be aware? Then sector searching. That's not necessarily on the weekly. I search maybe every other week. To be fair, you guys see how often we search. Watch list maintenance. Okay, so as I'm reading these things about our agenda, are these on your weekly routine? Watch list maintenance. Did you get rid of anything that you're like, you know what, this thing's just never going to give a signal? I'm tired of watching it. Did you create your opportunity list for next week? What are the 8 to 10, 12 that you think are most likely to develop into trades this week? And lastly, and this is something that should be a part of your weekly plan, right? How are you sharpening the saw this week? What are you doing to try to improve your trading plan? Okay, so that's what we're going to do today. We're going to do our weekly routine together. Interestingly, here's our posture from last week. I've just copied and pasted over to today. It's been pretty solid, right? Like the 2.5 moved to 3.25, sitting at 3.5. Now, this is just pure conjecture. Have you been watching the conflict between Israel and Iran? Do you think it's priced in? Or do you think it's escalating on Monday when we see the futures come tonight? Let's pop over and see if we can get a little early read. Trump's tariff timeout is almost up. Here's what could happen next. So we have these deadlines. Why Wall Street strategists don't see Fed cuts coming anytime soon. We I think tend to agree with that. Tariffs are coming for refrigerators and dishwashers. Middle East tensions and the Fed's dot plot. What to know this week? Israel-Iran trade blows for third day with no sign of let up. Okay, so you can see there's, I think, some rattled. As we look at this week's economic calendar. Any thoughts, anyone? Let me know if you have that. There's some breaking news. Top finance pros tell MarketWatch what their fathers taught them about money. Bombs flying even now, right? That's what I thought. I looked at it yesterday. I was thinking this thing is escalating. I saw a headline that was something like 15 top leaders got killed or something like that. Anyway, from Iran in one of their things. Energy sector is definitely advancing. Yeah, this is not good for, for as far as inflation. When we talk about the component of energy, if we see this put like a 7 to 10% push onto oil prices, that's the Fed's going to be like, yeah, there's no way we can cut rates. So what else this week? Uncertainty is intensified is a good way to put it. Empire State Manufacturing, nobody really cares. Defense, not defensive. Defense stocks, I think, is probably a good place to look. Press, you're not wrong. I think I just threw one off the list, didn't I? What was that? Maybe not. GDX? No, that's gold. I don't know. General Dynamics? No. Is that what it was? Retail sales, production, utilization. Wednesday is the Fed cut rate. There's no expectation for any cuts, but the verbiage may change, and that's certainly something that we'll be paying attention to. Nothing scheduled for Thursday, Juneteenth, Friday. Minimal. Yeah, not much. It's all going to come from where? Trade news, geopolitical news. It's military stocks, balanced trades, defensiveness. We haven't seen it yet, and now we're going to go read our numbers. Feels like there's some concern. Here is the expectation for July. 3-1 against. September 2-1 for. So I actually feel like that's a reasonable. Okay, let's go do some charts. Let's see. Where am I? Sorry, I'm losing my train of thought today. Let's go here first. Current score is a 0.5. Where's my pen? We haven't completed a full V yet. Essentially, we're kind of wondering, are we going to be coming out of that? So here's what I want you to be thinking about. If you look backwards, prior to this, Yeah, I mean a 0.5. If all you did was just sort of isolate from there, take out the fact that we V'd out of that. Where are we? It's hard to put it anything past where we are now. I have it at a 0.5. I actually thought about if it got to the top of this, maybe giving it another quarter of a point, and I still might actually in that situation. I think we're in the right place with a 0.5. What do you guys think? Does that feel like the right score? Does it feel light? Does it feel right? I'm going to leave mine alone, 0.5. Okay. Same for you. All right, perfect. Let's go into 6 months. Now, anybody that's new or newer, questions. This is today's the day that you are like, well, what about this? Or what do I think? Or how do I, or whatever it is, open it up. How's everyone feeling? Like, let's talk about like each component so I can just get a temperature check. Overall for the posture process. How comfortable are you with scoring the long-term trend? Pretty easy. Not too bad. You struggle with it? Let me know. I'm going to move on. You can just kind of keep it running. Not very, Kevin said. Okay. So, the longer in the group, the more comfortable. Good. And remember with long-term, the excuse me, with any of these components, the probably easiest thing to do is start with the objective and representation. Who does this represent? This represents institutional traders. So we don't really trade this. We're not like, oh, what am I going to take from this to a trade? We're looking at this as purely assessment. There was an institutional kind of panic right here. We saw it. They sold off, gapped down, recovered, flooded around, and then bam, we came out of it. So for us, from technicians' standpoint, yeah, you had this first part of the V, which was just like the reaction and then the recovery. But we're still in the second part of the broader V. I look for new highs and lows, but not angle of trend. So for me, the angle is really how I'm going to sort of, on this 2-point system, the stronger the angle, the higher I am, right? And so the colored lines you see here are a great representation. Like red, someone correct me if I'm wrong, is a 1. No, 1 1/4. And back here, this purple line was a little, you can see this line was not as steep as this line, and this is not as steep as this line. And so that for me is like, hey, how strong are we? Right now, we don't even have a trend to score, right? Like, it's like, well, what do you do if there's no trend analysis? Well, now we have to, do things like I did, where I'm like, well, what happened? Let's cut this off and see. Well, we were covered there. Let's, it's like when we're doing a math equation and you're like, I have a 2 on the top and a 2 on the bottom. I'm going to cancel those 2 out. Well, they cancel each other out. It's no longer a part of the equation. So we say that recovered what it needed, but it hasn't recovered for this. So this is still at play. This was the long-term really slowed down prior to this, right? In fact, you'll notice we had started to score to the red. We had started to score to the red even before we had dropped. And so anything can lead to it, Steve. See, sometimes when I don't have a trend, break support, get a quarter of a point. New high, quarter of a point, right? Like, so I'm just looking at ways to say, hey, we want to have something that represents the overall sentiment indicative of buyers and sellers, supply and demand. Anyways, so there's no formula, and that's a hard thing, I know, because I'm asking us to be objectively subjective, where we're consistent. The way that we do it the same way over and over and over again. But we recognize that we're putting an opinion on it. We're assigning our, like, oh, I think this. And then we reconcile as a group and go from there. Okay. Perfect. Good. Daily. Okay. Daily. Last week, nothing changed. 1.25. All right. So if I start playing some connect the dots. Right. Where, again, our equation says, well, let's just cut that out. What if we cut that out? I mean, it's okay. I'm okay with 1.25. I actually thought, you know what? We got to a new high. And I was like, am I going to score that? But as I look at this and the way I have this drawn, the answer is no. In fact, 1.25 may be a little bit high. That might be more of a 1. I'm not going to drop it, though. I'm not going to drop it. I'm just going to say, you know what? Let's just see. Because if we come down to here and then we turn this week, well, that's a higher low from here. And then I'm like, well, wait a second. That's starting to show up like a 1.25 and maybe. So I'm not going to overreact to previous giving points and taking points away. I'm going to look at this and say, okay, 1.25 feels right. Anybody higher, anybody lower? And is what I'm saying makes sense? Yes, Steve C. I mentioned the same thing during the week, right? During the week, I'm like, hey, look, we just kind of sneakily put this new high in right there where we had stalled. The problem is when I'm like, hey, when I drew this line, then I'm like, that does not look like a 1.5, right? If we're saying this is a 0, -3, +3, 1.5's got to be like, it's got to be moving. This is not moving like that. That moves like a 1. If you see what I mean on that scale. I know it was a really ugly scale. Questions. I'm leaving mine alone. So that's 2 scores in. I'm unchanged. Ooh, I'm nervous about volume. Off topic a bit, but I've read a few investors. I'm a big PTJ fan. Paul Tudor Jones. There's a great picture of Paul Tudor Jones standing in front of like a pretty old looking trading desk. And on his desk, just kind of taped up on the cubicle wall, whatever, handwritten note says, losers average losers. I was like, I love that picture. Yeah. Anyways, we are going to see a sharp decline in the US dollar, a 10% drop. I don't know. We've seen a pretty big drop, and then it's stabilized. Whoops, that's not it. I'm like USD. UUP. I'm like, what am I? Can't think of my symbols. we're way down from, back here, and then we dropped, and then we just sort of dropped, and then we just sort of dropped. And, we've already had, that kind of a drop. If you look at like the Euro USD, for example, it's gained about 13% on us since January. UUP, UUP is the bullish dollar index ETF, which is, it's an easy one to just sort of track the strength of the dollar. You can always come in. If you're on Thinkorswim especially, they have a broad range of currency charts. Do they show it in here? FX. You can see all of these. Like they don't break it down for the majors, but you can just type in 10%. We've already seen it. Is the DXY? Oh, the gold? Kind of. Yeah. I mean, gold. I think you could see gold still showing up as like a defensive trade in the current environment. Okay. Yeah. No, I love it. Good questions. What time is it? All right. We're doing all right. Let's go finish volume. I've got some nasty allergies. I can hardly breathe, you guys. Nope, not VIX. SPY. And what we don't love is that all of a sudden all of our selling days, our buying days are falling off. One, two. Okay, so again, our normal routine, as we all know, is to kind of throw these out as being stale. I'm going to give them 1. These two get 1. So I have 1, 2 for buyers. I have 1, 2, 3, 4 for sellers. Kareen, thank you so much. If you didn't notice, Kareen wished everybody in the room Happy Father's Day. Thank you. 4 sellers. 1, 2, 3, 4 ties. We're going to throw that tie out. 3 ties. 1, 2, 3 ties. 2 buys. 4, 2, 3. Oh. Man, that turned on us. That turned on us right there. How did that get so nasty so fast? It's like, whoa, wait, what? However, I'm only going to deflate it slowly. There's no need to panic. And the reason I'm saying that, although as I say that, I recognize that we could have something in here, but I'm not going to try to preempt that. My slope is still overall positive, right? Start to end. Despite up, down, and then this, I'm going to take it back a quarter of a point with the assumption, yes, right? The market always overreacts. That's the market's job. But we have to be aware of, we have a sell there and a sell there and no buys, which is fine. We know that we don't need buys. And so far, none of these sells have done anything, like break a support level. So Why would you throw out the oldest tie? Honestly, El Jago, because ties don't matter. I put him in there to just kind of orient, like, hey, there's some indecision here as well, but that doesn't actually influence the score. It could be 4, 2, and 9. My score would be exactly the same. So if you want to keep it, keep it. What I'm saying is I normally would throw out all 3 of those days. But I don't want to throw out the 2 buys simply because they were pretty instrumental that period. I'm going to give them one remnant piece, if that makes sense. And again, you're going to be like, Scott, that feels subjective. It is, but it's objectively subjective. I do very similar things consistently so that it makes sense, right? Like, and at the end of the day, we draw the line and we're like, here's our line of sanity. Should I be minus 0.25 if my line of sanity is up? Probably not. That's where we're not accounting for the market's overreaction to the news. Does that make sense? I don't know. Or here's an alternative path. You throw your hands up in frustration and you say, damn it, Scott, I'm tired of your inconsistencies. I'm scoring it this way, and I'm going to track my score, and I'm going to see if I outperform you. Please. Yes. That'd be such a, you would learn more on that little journey than you would possibly imagine because of I don't think you would ever do it in anger. I'm just teasing, of course. We're all best friends here. Everybody knows that. But this is not dogmatic. The way Scott does it's not dogmatic. I'm telling you how I do it, and you might say, nah, that doesn't make sense. I'm leaving mine because of this. I hope you do. In fact, I hope you actually go below your market posture chart, make a note. Scott did this. I did this. Here's what I think. And then 2 weeks later, you get to brag with that note. You get to pull it out and be like, hey, so 2 weeks ago, I made this note where I'm like, yeah, he's too early on this one. And then if it turns out that way, oh my God, I want you to do that. That would make my absolute day. Where you're like, yeah, I said this. I wrote my note. That's what happened. That would be helpful to me, to all of us, to be like, okay, I need to look back and be like, well, what, anyways. Yeah, challenge issued, my friends. Challenge issued. What am I doing with my score now? I'm dropping it to 0.25. Could you legitimately go to a 0? Yes, I think you could. But I don't feel like there's a need to bleed it off that fast. I don't think it's representative. I think, like Corrine said, it's a little bit of an overreaction to the news. And that's why our scoring allows us to account for that in a way that's not like we're trying to assert our opinions on the market. We recognize, my fellow blades of grass, what our position here is. We don't try to assert anything on the lawnmower. Constant. They do constant things. Corrine's comments, she said, do institutions love to react, sell a little piece to see if an institution's like, I want to pick up 100,000 shares, what's the best thing they can do? Sell 25,000. Test it. See if you can rattle it a little bit and get it down, and then you pick up the 100 too lower. Well, of course they try things like that. Hence our hiccups that we've talked about, right? Where we get in a trade and then all of a sudden and we're like, oh, it's not doing exactly what we thought at exactly the timeline. Oh my God. Is that how a blade of grass thinks? I don't think so. Nope, that's not how a blade of grass thinks. We think, ooh, is this a hiccup? Should we just let's evaluate everything we have to try to figure that out. And last round of hiccups, I pat ourselves on the back. We did pretty well, making sure we didn't. Maybe a couple. I know there's a few of us that didn't like, myself included, recent hiccups. Great, learn. But how's the overall? Yeah, no, this was a great conversation. 0.25. That's where I am. Okay, major market. Let's go. I got to speed up so I can get to the. And I started so late. It wasn't my fault. I blame first Thinkorswim, then I blame Zoom. Somehow Google's at fault too. I don't know how. It's Father's Day. It's not my fault. Where am I going? I can't even maintain my train of thought. Okay, here we go. Okay. Let me get the score. 0.5. What does a 0.5 mean? For me, it means that it's bullish and the NASDAQ is likely the leader. And that it cannot get above a 0.5 unless I start to see consistent leading from small caps. I need both to get to a full score in that regard. Okay. Let's see. Whoa, what just happened? I don't even know what that was an ad for. My goodness, that scared me. NASDAQ on top, S&P next, followed by the Dow and the Russell lagging behind quite significantly. 133, very same picture. Up top, S&P second. Sorry, NASDAQ up top, S&P second, Dow third, Russell lagging. So the context for setup is a 0.5. The NASDAQ or the Russell's nowhere near a scoring position. Everything else, scoring bullishly with the NASDAQ in a leading position. NASDAQ leading, S&P in second, and then what? Ba-ding! Here comes the Russell. Now, the problem is a scoring position for the Russell is in there, leading the S&P. We are leading. It is leading the Dow now, but it's not about like who's in third to score the extra points. It's about, is the Russell in a leading position? Got close. Got a little bit more and then came down. Then I'd be even closer. Now, am I going to score the first time it pops into a score? No, I'm going to give it. So we're still a little bit away. But it's good to see. Right? I mean, it's good to see. Like, it's what, even if we're not scoring it, in the back of my mind, I like to see where it feels like the next thing to be scored is more likely bullish than bearish. That the momentum is going a certain way. Right? Those are intangible to our scoring process, but they definitely, I find, to be helpful. Much in the same way when we do a market posture preview on Fridays, where we're like, hey, if this thing looks like it's going to drop a point, yeah, I'm probably going to close some things. But if it looks like it's holding on or going to move, I'm going to take some, keep some, or whatever it may be. So, any thoughts, any questions? I know this one can be tough for scoring Press is dying for me to get to the 22s. Just show the 22. Ooh, and there's even more of a pop. Right? So that is encouraging to us. It's not going to get scored. We're not like, hey, we saw this thing on the 22 pop into a leading position and then drop back down into third 3 days later. We need to see the consistency. But what I'm saying is that's leaning us more towards a 0.75 than a 0.25. And that's always helpful as we're posturing, I think. Press, it's true. It's the same thing. Like, think about, it's just like a moving average, right? We mostly, for trading purposes, are looking at a 50 or below, and some people are looking at 8s and 12s. I don't use a lot of moving averages. You guys see that. I put a 50 on. If it breaks the 50, I bring up the 100 and the 200 for perspective. It's nice to have an orientation around that for me. But you're right. It's fresh. This shows the momentum. Intangible, but important. Score stays the same. Anybody changing theirs? Anyone wildly off? Just as we take a quick peek. I'm at a 0.5. I thought this one might, actually. I thought my volume was going to drop, and I actually thought this one could pop a little bit, potentially. Let's go see. What do we have for leading? Communication service. Ooh. Communication services. Discretionary. Financials. Industrials. Growth. 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 Defensive at the bottom. And then look at technology, who V'd all the way back. And then we don't score that it was a V, but it's like, of our things that are above, here's the market. So we have 1, 2, 3, 4, 5, 6 things. 5 are growth. 1 is utilities. That's pretty solid for a start. Tells me that we from a sector perspective seem to have gotten through this, right? Again, where we're like, hey, once we see that V, we tend to take it out of the equation at that point. Though recognizing there are some lows there that could come into play if markets re-escalate. 133. Growth. And then look at technology, growth. Utilities, still there. Industrials, growth. Financials, the market, staple. So here you add another, right? In this pile, you have a second defensive. So you can see why this is a slow to change. This one was negative for the longest. And then it was 0, and it stayed 0, and it stayed 0. It's the only point, the only component that hasn't reinvigorated at least a 0.25 or more bullish score. 66 days. Okay. Technology. Move to the top. Industrials. Oop, sorry. Good catch. Let me it's when you type it in that it's dangerous. Miguel will keep me honest. Same analysis, even stronger. Technology 1, industrials 2, discretionary 3. 1, 2, 3. And then there's the market. And then we have communication services close by. But then we still have utilities in there. We still have, I guess Staples has dropped a little bit. So just utilities. Yeah. For a while there, this one was the one that was holding us back. Definitely going to give this a quarter point. That's what we've been looking for there. 0.25. Agree, disagree? Where are you at? I feel like that's done enough to break it, to break the neutral rut, so to speak. Oh, there I did it again. Miguel's watching. Something positive. 22 days. Okay, here we go. Uh, 22 days. Ooh. Healthcare. What? Where did that come from? Press, have you looked at this prior? Energy. Yeah, we knew that was coming, and that's going to keep on coming. Energy, healthcare, everybody else is just kind of in the mix. Not really helpful on the 22. It was much stronger on the 66, ironically. So a little bit of like, ooh, are we gonna get that 0.25 up to a 0.5, or is it gonna stay at a 0.25, or is it gonna ease back to a 0? We'll see. We'll see. Any thoughts? Are we all in agreement? Yeah, I'm a bit concerned about how the futures are going to react. I think we priced a lot of it in, but it is definitely ongoing. John's in alignment. That's all I needed to know. We're moving on. VIX. The VIX. Let's get back to 6 months. Gene's in agreement. Love it. Not sure if fully priced. See, and that's the thing. We're going to talk about that in 1 second. I agree. Yeah, look, this is still okay. We still haven't gotten up to that body. Nowhere near that high. I mean, we could hit 23.5, and I would still give it a lower high comparatively. I'd pull the shadow into play. And you might think, can you just do that, Scott? Can you just pull the shadow in if you want? It's my constitutional right to do that. Is that a constitutional right? I don't know. I feel like it should be. It's my trade. I can do whatever I want with it. I agree, Miguel. But I also think we have a little more room, and it's still a bullish. Okay, so unchanged for me. Unchanged. It wasn't enough of a lower low. Oh, I don't know. Is it enough? No. Is it? What's my score? Now I'm going to leave it. I'm going to leave it knowing that we could very easily be up in this 25 on Monday. So if it weren't for the Iran escalation, I might. We were looking at this and we're kind of like, it wasn't enough, but I mean, you could give it just like a empirical nod. Nah, I'm leaving mine. That's me. That is me. 3.5. Hey, another week. That's 5 weeks straight. And we said when we first popped into that 2.5, we're like, we may be here where we're just kind of in this 2.5, 3.5, and then it might pull back. I still think we might see this go 3.5 back to 3. And then what we're waiting for is breaking to the next, like, when we break out, completes the second V, opens up new highs, blue skies, our market pops up to a 5 or a 6, and then we're all even just a little happier than we are now. It's been good. I mean, I feel like as this thing transitioned to this 2.5, 3.5 market for the last 5 weeks, I feel like we, put some irons in the fire and went to work. So don't lose our nerve now. I'm still looking for trades. There's nothing here that tells me, again, let's see how this processes. I'm going to read how Press sees it. He says, first, spike. Second, not enough to show them. See, I don't think it's lost its nerves at all. I think in fact, as I watch sector rotation come into more bullish focus, I think the institutions are actually holding up just fine. That's how I see it. Holding up just fine. Okay. Yeah. Let's get to the watch list. We're on to record keeping. So I'm going to do this real fast. And you're like, record keeping, that's a really short section. Yeah. You don't even write anything here. You just go download, whether you're trading stocks or options, go download a log. Go get your last 25 trades to get a starting point and then start logging going forward. If you want to go further back, you can. Basically, it's start logging. Keep a log. Keep a journal. If you do number 6, then it gives you number 7, analytics. Once you do this little log, it's going to spit all this out. You're going to be like, oh, look at all my data. Look at all this good data. And once you have all that good data, then you can move on and try to improve with it and make some goals, process goals. Focus on improving the process. Anyways, I'm getting ahead of myself. Let's get to the watch list. See what it says this week. I need a note card and a pen to write it all down. Okay, what's today's date? 6/15. Apple is a no for me. AbbVie. I mean, with what we just saw from the healthcare sector, am I wrong? We should have this on our list. This thing could flag and pop. We should have something ready. You know what? I might actually, this week, because of that, I don't love healthcare as a sector. XLV. So you can see we've kind of broken this consolidation, got up. If this thing pulls back, I don't know. I'm not going to watch it. AbbVie's enough for now. Don't get ahead of yourself, Scott. Stick in the watch list. ABVV. Amazon. Amazon on the list, definitely. APH. If I wasn't, here's an evaluation rule that I use. If you weren't already in the trade, would you consider getting in? 100%. 100%. Looked like it was breaking the flag, pulled back a little bit. This thing can move. And once it goes, yeah, it's on my list. If I wasn't in it, I am, then I would. BAC. I think there's better. I'm going to hold off. Caterpillar, yeah. Industrials, sector's looking better. CLS. Traded it profitably. Some people got more profitable than others. Just made a new high. Now it's pulling back. Should it be on the list? Hell yes, on the list. CME. I'd still have it on the list. It's popping off that support level. You had an engulfing on Friday. Nobody loves that, but at the end of the day, it could be a hiccup. Capital One on the list. You might be thinking, why, Scott? Why is it on the list? Well, yeah, we popped up and we pulled back here, and now we popped up again. There's a little mini cup and handle above the 50. As long as this thing turns above the 50, above the old low, yeah, I think this could make at the very least, makes a run at 210, the old high, if not even a little bit more. Yeah, on the list. It's a good list so far. Cisco. Yep. Everyone said it at the same time. They're like, of course it is. Look at it. Higher high. Big cup and handle. It's holding on. No big sellers. Of course we like that. Of course we do. But of course. EA. Oh, no. Not yet. It would be too easy to do it this early. Right? It would be too easy. You got to give it some time. It's going to be very, very sneaky. Flex. It's kind of grinding now, but maybe I'm going to hold off. I still think GE Vernova belongs on the list. Gold. Google on the list. Communication services, Meta and Google both look great. Goldman, iffy. Robinhood. I'd say Robinhood still looks good. Still in its kind of a pennant triangle. It's a little long for a pennant now. It's getting a little bigger. It's definitely a consolidation. Howmet. Love it on the list, of course. Definitely a setup here. This could be a Monday trade for sure. Right? I mean, we're trying to catch, and then that's what we want right there. HWM, I don't think it's considered defense, but maybe. I'm not gonna lie, press. I'm not sure. They may be. I'm going to look it up. Let's go look it up. Analyze. Fundamentals. Howmet Aerospace. They provide advanced engineered solutions for aerospace and transportation industries in the United States, Japan, but a number of different countries. France, Germany, United Kingdom, Mexico, Italy, Canada, Poland, China. Engine products, fastening systems, engineered structures, and forged wheels. So no, I think they're just pure like transportation and aerospace and not. Yeah, they provide titanium ingots and mill products, aluminum and nickel forgings. Oh, that all sounds very cool. Jet engine components. Thank you, Kareem. Very nice. Trade looks like a great setup, in my opinion. IBM setting up. We just had a great trade on IBM. Next one is coming into the gates. IWM. I like small caps. I'm putting IWM on my list. I'd maybe take a run at it if it gives me something in here bouncing off the 50. Maybe the institutions are sniffing something here, right? Maybe. That's the only way I trade small caps. MasterCard, battered. Meta, beautiful. Morgan. I'm going to keep it on my list. I think it has more in the tank. Microsoft. No. Netflix. Yeah. NVIDIA. Yeah. I'm going to have to go to a second note card. So if we are concerned, why is our watch list so good? Now, everything could be disrupted on Monday morning. We know that. Okay, great. Then we'll adjust. PLTR, yes. In the meantime, we've got a great watch list. Philip Morris still looks fine. Got a nice defensive. We've got a.
This is a reminder.
We've got a nice defensive position on. Roblox still looks kind of bullish. I'm going to put that there. PM, RBLX. Rivian stopped out, died. Put it out of its misery. Tesla, maybe. TSM, absolutely. Uber, bullish dollar. Visa got battered. Walmart, nah. There it is. MU, Micron, let's take a look. Probably. Chips are in a good place as a group overall. Oh, beautiful. Yeah. That's a strong one for sure. I'll put Micron back on the list. Definitely. Okay. Well, there it is. Posture stays. Watch list looks strong. Lots of things on the opportunity list. What do we need to do? Survive Monday morning. Survive Monday morning, and we'll see what happens. Carrying a couple things. Still have a piece of hedge. I feel like I'm in an okay place no matter what. And then I'll be ready to adapt once the week gets going. Okay. Well, I'll tell you what. For starting late, ending only 7. I end 7 minutes late all the time, even when I start on time. So we did okay. I still have half the hedge from the trade that I put out. On an alert. I don't close the hedges easily sometimes. Hope you guys have a wonderful Father's Day. A wonderful rest of your Sunday. Be safe. I'll see you in the morning, 9:15 a.m., 15 before market opens. As always, happy trading.
Recording stop.